So today, the subject that I wanted to talk about is FIRE, and it's an acronym that stands for Financial Independence, Retire Early. That's typically how it's mentioned. I like to think of it a little differently. I like to think of it as financial independence, recreational employment. What that means is once you reach financial independence, you can choose the type of work you want to do or no work. Either one is up to you. So it's a fun milestone to reach. So in the FIRE community, they have some formulas that they use in order to figure out how much do you need to save and invest in order to reach this mythical point of financial independence. It's not really mythical, but it's kind of a goal you're shooting for. So the typical rule is called the 4% rule, and there was I can't remember the guy's name, but he analyzed all the different markets out there across, I don't know, 100-year period, and said if you just withdraw 4% of your account every year, you'll have enough funds to last for 30 years. So if you know how much you need in order to live on, to be financially independent each year, then you can calculate how much you need to save. So if you think you need $50,000 in order to live on, you've reduced your expenses, you maybe own your house, you still have to pay for healthcare and whatnot, but you've determined you need $50,000. The way you do it is you divide $50,000 by 4%, or 0.04, and that'll give you the amount of money that you need to have saved in order to be financially independent. And so if you do that math, it turns out to be $1.25 million that you need to have saved and invested in order to be able to pull out 4% a year, every year, for that 30-year period in order to never run out of money. So $1.25 million is a lot of money to save, and it's kind of disheartening to think about how much you need in order to retire. But there's some investments that I have come across that are pretty interesting because they potentially give the ability to remove more than 4% from your account, but still be fine. And so one of those is a pipeline company called Plains All American Pipeline. And the general partner version of that stock trades like a normal stock. The ticker is PAGP. What's interesting is, as of today, when I checked it, the dividend yield on that stock was 8%. So that's interesting because what that means is you can purchase shares of that stock and then withdraw. You don't even withdraw, you're just getting a cash flow of 8% every year. So that changes the math. So if you need a $50,000 revenue, but you're getting 8% every year, what that means is you only need $625,000 in order to reach financial independence instead of $1.25 million. That's a lot closer to being in the grasp of the average person, particularly if you're trying to, I guess, retire early. So again, if you had $625,000 all invested in Plains All American, the general partner version, PAGP, every year it would pay you 8% of a dividend that you could use to live on. And what's interesting about that is that you would never have to sell a single share of your stock. You could just always own all those shares. So I like the idea of diversifying. So I don't know that I'd put all my funds into one particular stock, but it's a different method of being able to live off investments. The pipeline stocks, there's multiple out there. I mentioned PAGP. They are infrastructure stocks, vital infrastructure that move energy around in the country, and they own oil pipelines, natural gas pipelines. Some of them move other chemicals around. We have to have these pipelines in order for the energy systems to work in America and around the world. So they're not going anywhere. Some people think maybe we'll go nuclear or electric someday more. It's going to take a long time before that will happen. So these pipelines are needed for our economy to function. I guess some risks to happen every once in a while. There's some kind of an accident that happens with the pipeline. The few fires happen every once in a while. They kind of can have pretty massive and spectacular sort of events that take place. It makes the news for a while, but then they just kind of clean it up, fix it, put it all back together, and then they're back in business again. There's some environmental concerns every once in a while. Somebody tries to shut down a pipeline. Usually it's just a bunch of hooey about it, then a media blitz, and then it's kind of over and done with. But in theory, you could have an issue with one of your pipeline companies where it has a problem, but any stock can have that too. So I'm just saying it's vital infrastructure. Pipelines are interesting, and again, this one pays out 8%. So if you put in $625,000 every year, you could pull out a $50,000 amount to potentially live on. Now, most of these energy companies try to increase the dividend every year. So over time, hopefully the dividend stays above inflation. So that's one positive thing about owning stock. And then also hopefully the shares appreciate. I've been watching this one over the past couple years, and I think it's interesting because the shares that I originally purchased are up over 100%, and that's quite a gain of appreciation along with dividend payments. I do think Plains pays part of its distribution as a non-dividend distribution, so I think I've been getting a basis change in my shares, but I've only been in these stocks for the past couple years. So it's interesting that you can get something that both appreciates your share value and also the dividends are present, and they raise the dividend every year as well. So it's an interesting thing to consider for financial independence, where you can buy a particular type of company that pays you the money you need to live on, and in theory you need a whole lot less in order to earn the income in terms of the amount you have to save if you use one of these higher paying stocks. So hope that is of interest to you. Check out PAGP. It's not financial advice, not a recommendation. It's just another possibility for something that could be used to reach financial independence earlier. And once you reach it, then you can determine, do you want to work? Do you not want to work? What kind of work do you want to do? And I think that would be a general improvement in life. So there's the thought for the day.